Everyone, now I want everyone to keep their mobile phones on because in the next 30 minutes we will only talk about how can we make money. If there are three market men and a business anchor, what will we talk? How to make money? Am I right, Sikka sir? 100%,
that's what we are for.
Bala?
Yeah, definitely. That's why we are here.
And Mr. Chauhan is in the center because every time you guys make money, exchange also makes money. So he's the happiest because he's always making money. Am I right?
I must also mention, we also trade more in NSE, they also make more money.
Am I right that whatever happens, you will make money?
I think purpose of exchange is to provide the most efficient markets at the lowest cost. And so if exchange doesn't make profits, it's okay. I don't think.
But last 10 years, exchange has made a lot of money.
Which is besides the point, right? Sometimes you do it without your knowledge and without the basic purpose. While other people work hard and still they may not make it, is a different issue.
So I'll talk about the big picture. And again, this was the introduction that this is the 10th edition of IEC. But on the first edition of IEC, and I would not use Sensex for benchmarking purposes, I would use Nifty for benchmarking purposes. 10 years ago, of course, Chauhan Saab was BSE, so I was using Sensex for benchmarking purposes. Ab NSE pe to Nifty ki baat karte hain. Nifty that time was sub 10,000 and closer to 6,500. Today we are standing tall at 25,000. So starting with you, Mr. Sikka, last 10 years, it's been a 4x only for the index. Next 10 years, where do you think Nifty could move?
So Nikunj, I don't think so I can give a prediction on the Nifty, but broadly the way we should see is I think the other way around, the way India is growing. I think today we are at a point that I think we are almost, whether in the next 2 or 3 years will be a $5 trillion economy. And stock markets are a reflection of the economy doing well. So I think for us, rather you talked about Nifty, I'll say I was a part of the first edition. And that time, you asked this question to me, about the mutual fund industry. At that time, the mutual fund industry was less than 10 lakh crores. Today, we are at a point where almost going to be touching 70 lakh crores. And all this has happened in the last 10 years. So I do not know, I think, what will be the Nifty. But I can tell you two things. We are at a stage where the capital market, the mutual fund investors in India, I think, are coming from small cities and towns. And today, it's becoming a household product. So we are coming to a stage where very soon, maybe next 10 years, every Indian household will be a mutual fund investor. And that's the kind of capital flow that will come from household savings to capital markets. And I think with the country doing well, I think the biggest thing is we are at a stage where Indians will start benefiting from the India growth story. So I think maybe 10 years down the line, and I don't know the Nifty, but I can assure you with a lot of conviction, every Indian household will be a mutual fund investor.
And the data is quite, staggering. India has only 5.5 crore unique portfolios. Yeah. We have 20 crore OTT accounts, and we have about 25 crore food delivery accounts. So in a country which is young, in a country where the average age is less than 50, the number of portfolios are nothing compared to global averages.
I cannot agree with you more, but Nikunj, the way we have to see the trend is changing very positively. Today we are seeing a lot of young investors, women investors coming from smaller cities and towns. So maybe 20 years back when my father retired from government service, he had to put his proceeds. When I told him about mutual funds, it was difficult to convince him. But my daughter started working, the first salary she invested in mutual fund SIPs. So that's the change that's happening in the country. So I think I'm very confident. I think this 5% right now looks low, but directionally the speed at which the change is taking place is unbelievable. So I think we're headed for good times, and it's not about the mutual fund industry. It's great for Prime Minister's vision of Atmanirbhar Bharat. I think we are trying to be basically from a capital which is in small cities and towns, from how financial saving is coming to the capital market. So this is a true way how we can be Atmanirbhar Bharat.
Mr. Chauhan, this financial inclusion, which now seems to be picking up in terms of a trend and more importantly acceptance and faith, is the trend here only going to multiply in next 10 years, and how much can it multiply?
So I'll give you the information as of date. Today, we have at NSE around 21 crore accounts, which comes to 10.7 crore unique PANs. 10.7 crore unique PAN numbers, which is unique investors, out of which around 2.2 crores are women. So 8.5 crore males. More than 8 crore households are now directly investing in stock markets, including mutual funds, but also directly investing. And 8 crore households is actually more than 20% of all households in India, which are directly or indirectly through mutual funds. Of course, they are directly investing because they are our customers, because we are an ID market, so we know. And to give you an information, at 20%, we are amongst the very large country in terms of even percentage of people investing in stock markets. Germany does not have that number. France does not have. Entire Europe does not have those numbers of 20% households. And the other side is also true, that now that 8 crore households are competing with number of farming households in India. Number of, in any type of cohort you see as a political constituency, now we are actually, although both of them do not know that, but today their constituency is equally larger or equal or larger than other political constituencies. So this is becoming very important because Delhi needs to know that investors of India are now a force to reckon with.
But investors in India pay taxes, farmers still don't pay taxes.
That is, again, for me, it's besides the point. But they will have expectations and they will assert. See, when, say, 5 years back or even when Mr. Modi took over in 2014, there were 1 crore investors. Today, 10.7 crore investors, unique. 67 lakh crore were market capitalization. Today, 440 lakh crore, 6.5 times more in 10 years' time. For me, those numbers is 1/3 of India's wealth. Today, stock markets are 1/3 of India's wealth and double the size of India's banking system and more. In equities alone, right? If you take debt, it will be 2.5 times. So it's a very large thing in whichever way you look at, because people are now directly, there are two types of financial savings. One is what we call intermediation, which is through the banking system. Other is through the markets, which is called disintermediation. And today, a large part of India is saving through the disintermediation route, that is through the markets. And last month, there was an interesting sort of a research report by Morgan Stanley, which said that from 2014 to 2024, 3% of the savings incrementally went into stock markets. But at the end of 10 years, the outcome is 20%. So that 3% which people are saving into stocks have now become 20% of the total savings, whereas what that 97% has become 80%. So effectively the stock markets are becoming the primary driver of people's savings by demonstration, by checking out everything that people are seeing their neighbors actually making better returns, and that's why they are coming to the stock markets.
So Bala, if the stock market holding data is anything to go by, today the domestic holding via mutual fund route or by individual investors for the first time has crossed FIs, which means that Indian investors own more shares than what foreign institutions currently own. आपका भी फोन बज रहा है, आपका भी फोन बज रहा है, आपका भी बज रहा है एक साथ. So, my point is, do you think the trend of this financial inclusion is a real trend, and how large this trend could become in the next 5 years and then 10 years?
Yeah. I think the way I see is, I think we must also just go back in the memory. The entire awareness creation about investing in the financial instruments, capital market instruments, through the mutual funds, as well as in the stock market, started somewhere in 2012. Serious activities, which call it the financial literacy programs. The mutual fund together undertook the responsibility of improving the financial literacy in the country, took it very seriously. In fact, we got the significant support from even SEBI as a regulator, asking us to keep aside some portion of the money only towards the promotion of mutual funds and financial saving in the country. And these activities are not done alone by the mutual fund. It was done together with NSE, BSE, in terms of improving the importance of investing in equity, because the power of compounding actually is a lot higher in the equity investing. Therefore, that's why we started. The number what Sundeep mentioned about 10 lakh crore size become about 60 lakh crore size, we must also look at the number from a different angle. While the 10 will become 60, 70, 7 times increase. At the same time that 10, it was actually 2 lakh crore was the equity, 8 lakh crore was the debt. It was predominantly mutual fund the early part of the year. It used to be the fixed income component was the dominant component of the mutual fund. Today, equity component in the mutual fund industry now is the dominant component. It's almost about 60% average of assets and management coming from equity, which essentially means equity cult in the country has improved quite significantly. The second is the last few years. Earlier, we used to think about mutual fund means is only Mumbai and Delhi and large cities. Therefore, the penetration in the deeper parts of the country were not happening as much as it used to happen. Where I used to still remember Ashish used to always mention about the stock exchange has become so powerful, you can execute the trade in nanoseconds. So nanoseconds, not many would even hear about it, but he always used to use nanoseconds. That actually increased the connectivity in the country. In the same way, mutual fund also got penetrated in the deeper parts of the country. That's why I think the B15, B30 when it came. Today, almost about 23% of the equity assets under management coming from cities other than top 30 cities, which essentially means people have adopted mutual fund as the one of the vehicle investors. This actually helped in market as well. The last, of course, is the in the number of unique investors we talked about. The folios also, of course, keeps rising, and that's again coming from the large flows in the form of an SAP is coming. But other point, if we have to look at it from a market point, we mentioned about $4.5 trillion market cap, which is almost about 140% of the Indian GDP size today in terms of our current market cap. But again, we look at the experience of investors who came in actually in the last, I think in the last 3 years, the industry number of customer base that got added almost doubled. There were all new customers. When the new customer comes to the market and they have seen actually a one-way and up movement, and the experience for the investors also is very good. Therefore, it actually boosts the confidence. As a result of this experience, so as a result of the alternate not being as attractive as an equity from a power of compounding point of view, a mutual fund vehicle now is becoming actually primary investment vehicle for investors. I think the significant consideration. Even at the industry level, me and Sundeep, we all used to debate in those days, mutual fund subject to market risk. Is it making people to come and invest or making actually people not invest? There used to be always a perceived notion that mutual fund subject to market risk is actually driving away the investors. Today, nothing has changed. Mutual fund subject to market risk, it remains the same tone, with the same voice, the same speed. And what has actually preceded the mutual fund subject to market is actually mutual fund chaiye. Right? That's what preceded. Therefore, it boosts the confidence. So, therefore, my belief is mutual funds becoming a primary investment vehicle for investors. And equity, having seen the last 10, 15 years, 20 years return, if you look at it, and the way I think the earlier section with Arvind Panagare, we talked about the next 10 years, if you have to look at the economic growth, I think clearly, power of compounding actually remains very, very promising, not only just for the growth of the economy, even for the market point of view. Therefore, I think equity and asset class will continue to be the primary vehicle for savers in the country.
Mr. Sikka, at every forum where we interact with you or we speak, we always do this very simple exercise so that we can explain the word or the magic of power of compounding. Let's do that again before I go to my next question. What is power of compounding? And if money grows at 10%, 20%, 25%, what difference does that make?
Well, it's a very interesting thing. I mean, this is one of the not so well discovered, formula by a lot of retail investors, but those who have discovered, including some people on the dais here, they've been able to create a lot of wealth. So what is power of compounding? I think the beauty is, many times, and I'm going to step back a little, whenever investors invest in markets, they start thinking it's very important to invest and review and reinvest, move out, keep taking those calls. But the power of investing is basically that comes when you're a lazy investor and an informed investor. And I'll try to define both the things differently. Lazy investor is someone who invest for long term, is not basically getting human bias into it again and again because the markets are going up or going down. But the intelligent investor is basically the one who understands the power of compounding. So let's give an example. One of the oldest funds in the country, which started in 95, without naming it because I'm on the platform here, the NAV of 10 is today about 4,000. So that technically means basically that fund over the period of time has given a return of about 23% since 95, compounding. But if we were to look at another fund, which would have given just basically 15%. So that 10,000 rupees which becomes 4 crore rupees, effectively the 10% difference means the wealth is actually half. That's the power of compounding. What we see 10%, 5% looks very small, but you see over a longer period of time, it totally changes the dimension. So I think from our point of view, the power of compounding, Nikunj, that you mentioned, that is one big change that we have seen. Unlike in past where people used to try to invest in mutual funds like stocks, buy, trade, move out. I think we have seen a very big change. Basically, people are understand the power of compounding, investing for long term. And I think that what we are seeing, the longevity of our SIPs increasing day by day. So I think all I can say is to Nikunj's question, the power of compounding, what it does is basically it is not basically in a linear way. I think it basically 10 rupees becomes 4,000 rupees NAV over 25 years, and the compounding is only 20%. And that is the wealth that a person can create.
So 10 rupee NAV in 1995 has become 4,000 rupees. And I must share it with you that that's one fund I had invested in.
No, I did not want to make your investment, public. But yeah, I think it's again, I use the word intelligent investor. And you come in that category, Nikunj. Because I think what we have seen, that's a fund which is 25 years old. Today has got 1 million investors, but only few thousand investors have been able to take advantage of that by staying there. And so, fortunately, you're one of them.
Well, let's do a maths here. Unit कितने थे वो तो बता ही नहीं है ना, वो बड़े कम थे. If your money multiplies at 25% for 10 years, after end of 10 years, any guesses how much will it happen? 10 years, 25% compounding. It is 10 times.
10 times.
But if your money compounds for 25% for 20 years, how much will the return be? Any guesses? It will be 100 times. And it has happened in India in the past, and I have reason to believe it will happen in India going forward as well, because looking at the way how the demographics, entrepreneurship, government policy making, and the whole financial inclusion is moving. It's not very complicated, it's very simple. It's just that we need to have a very disciplined approach. And when I say this, I think I'm the official ambassador for mutual funds now.
I completely agree with you.
Okay. Mr. Chauhan, you have been an entrepreneur. You understand the entire financial inclusion theme very well. You're running one of the most and one of the biggest exchange in the world now. Give me a theme or an idea which should come from Ashish Chauhan, the entrepreneur and the investor, which could be the big theme and idea for next 5 or 10 years.
The idea which I have worked with all my life, including starting NSE, I was the original 5-member team in 1992, which was selected to set up NSE. And since then, I have been party to many businesses, some of them my own. I failed many times, but some of them became very large, including NSE, where we started with 25 crore or less of market cap. Today, you can figure out the market cap after this. It's probably 20,000 times, right? So, larger.
So NSE has become 25,000 times.
20,000 times larger for that 25 crore rupees or 24 point something. And so I've seen that power of compounding. I've seen that power of conceptual activities. See, most of the time we think the wealth comes out of physical things. Increasingly, the wealth is becoming dematerialized. I give example just to convey that music, if King Akbar wanted to listen to music, he had to wake up Tansen in the night at 2 a.m., get all those 40 companies, and then get all their equipments and then start playing, right? And then, of course, wake up everyone else. But basically, he required physical 40 people and Tansen, and now we have 10,000 Tansen on our mobile whenever we feel like, right? At zero cost, because he had to actually keep those 9 Ratnas not for anything, just for his entertainment, right? But they used to cost him a lot, and only Akbar could afford in those days. Today, we are all better than Akbar because we can afford 10,000 sports stars and 10,000 music stars and literally millions of them, right, in all fields. And that's where the more wealth is going to be created more and more into things which we cannot touch, but we can feel. Experiences is what humans want. Physicality is where the experiences is to come from. And now, increasingly, most of the wealth will be in, even the experiences will be more virtual. That you want to travel to Mount Everest, it will take you 30 days and a lot of hard work and a lot of money. Or you will get a sort of a chair where you sit and next 5 minutes you will be shivering in the chair and you will be thinking you are in Mount Everest. And that experience will cost you probably 10 rupees vis-a-vis spending 10 lakh rupees to go to Mount Everest base camp. For me, one is the new technologies are dematerialized and they scale up so fast that they become available to the poorest of poor. And that's where most of the wealth will be created. Earlier times, the wealth was in physical people. That's why it's called capita. What do you mean by capita is number of heads you had. Then it became land. And now it's becoming the new games, new experiences which you will create virtually. And for me, the next 50 years will create more wealth out of those newer things than that was created in last 10,000 years. And that's going to be an explosion of wealth. Who can create that wealth is young people, because they learn newer technologies, whether it's biotechnology, there is gaming, there is mobile. Which country has young people? India. Which country has young people who are technology oriented? That is India. And that's where most of the future wealth, which is dematerialized, will be created by Indians going forward. And that's where if you invest in those companies which are into more virtual wealth creation of different types, virtual experiences, those are the companies which are going to get you great results.
तो अब एक चीज ऑनेस्टली जवाब दोगे, हाथ रख के बोलो, ऑनेस्ट आंसर. Which is a better mutual fund, Nippon or Birla?
See, both of them in a way, yeah, I mean, I am invested in both, but in their index funds.
ओके सो नहीं सवाल खत्म नहीं हुआ है. एनएससी का शेयर खरीदना चाहिए नहीं खरीदना चाहिए, ये तो आप बता सकते हो. सिक्का साहब,
Sorry,
एनएससी का शेयर लेना चाहिए नहीं लेना चाहिए?
Yeah, when they go for
He said good things. He's invested in both of you. Know, you say good things about him also.
I think broadly, anything to do with capital markets, you need to be invested in.
Yeah.
Okay.
I just want to add to what Ashish just mentioned, Nikunj. I think one of the biggest success that you have created in the last 5 years, enabling companies who needs capital to rise from the market. The NSE and BSE have been the largest provider of platform to help companies to rise equity capital in the market. I think even NASDAQ always take credit that have helped so many companies rise resources for building the business. So NSE has done a great job in terms of helping companies to rise capital by way of listing. And there is one number, if you just look at it, just about 5 years back, the dominance of Nifty 50 companies used to be somewhere around 58%. Today the same dominance is about 43%. Then Nifty 100 companies, the dominance used to be about 69%. Today is actually 58%. The Nifty 500 companies, the dominance in the overall market cap used to be about 93%. Today is about 88%, which essentially means more and more companies actually are able to raise money in the market. Second number, if you look at it from a fundamental point of view, invariably as a country about 10 years back, the dependence on for building our business through the debt was very high. Any activities you have to promote, first you go to the bank and borrow. And today they don't go to the bank for borrowing. Actually they come to the equity capital market for taking money, not borrowing of course. They come to the equity capital market for raising funds. As a result of that, the corporate balance sheet becomes so strong that debt to EBITDA, which is what we measure one of the metrics, it used to be about 0.4 now it's gone to about 0.2. Yeah, essentially means now leaving a lot of leg room for companies to make investment, leverage the balance sheet for the next 10 years. If you look at it, the leverage capability they will have for them to build the next future growth of the country, I think will be equally reflecting on the economy, market, as well as our mutual fund growth.
Okay. So I've got like about a minute left. So 30-second answer. Give me one big money-making idea or a theme for next 5 years. 30 seconds to answer this one.
Invest in mutual fund equity and leave it at that.
Okay,
forget about it.
Okay, minus mutual funds.
As he mentioned about Nifty.
Okay, so one is Nifty, stay invested. Give me a sector or a theme also.
I think India is going to be a wide sector participation. The diversity equity funds will be the best actually to play the India story.
Okay. Sikka Saab, same answer.
I think broadly, I clearly believe, as India moves up from, as we'll move to a $5 trillion economy, per capita income will move towards, $3,000, $5,000. The household savings will increase. And Indians, unlike the Western world, they love to save. They save for themselves, they save for future. Anything to do with savings, anything to do with wealth management, anything to do with the stock market, those are the companies and the sectors that I believe will do well.
Chauhan Saab, last sawal. Pakka? Akhri. Why is ET Now your favorite channel?
Nikunj is there. So he keeps on asking me the question saying which stock they should invest in, and I am not allowed to even invest in stocks, right? So that is why he keeps on asking me those questions to just pester me all the time. But thank you.
Thank you very much. And all I can say is that in last 10 years, and I'm not getting into once upon a time in history, in last 10 years, just think about what all we've seen. We've seen COVID crisis. We've seen problems in US. We've seen assassinations. We've seen economy tumble. But the bottom line here is that Nifty in last 10 years is 4x. The wealth of the country is moving higher. And what is making India unique, is entrepreneurship, governance, stability in terms of government policy making, and the excitement which the young population clearly is enjoying. Zomato is a company which 15 years ago did not exist. Today is part of the Sensex. NSE profit were in double digit. Now it is marching towards 5 digit. That is the kind of, exciting phase we are in. And that is what about, IC is. So we've already established the coin is no longer quarter se quarter tak. It is decade se decade tak now. Aisha, it's back to you. Thank you very much.
No, we'd love to ask Mr. Chauhan where to invest once NSE lists. Let's see whether his answer remains same. Well, thank you, gentlemen. It was clearly an insightful, discussion on the health of the capital markets. But from